Hello, I'm Tyler Chianelli, creator and head trader of Options Trader Club, the membership community that is all about success-driven trading. And one of the most popular and main benefits are my weekly trading room webinars. Every Wednesday, Webinar Wednesday, we have these interactive sessions that are over an hour where I field questions, put on new trades, manage existing trades, back test different ideas, and see what's working in our current market. And I want to give you an insight to what you're missing out on. So here's a clip of our most recent live trading. I hope you enjoy it. Ask questions, and if you need any help, I'm here for you. Enjoy. We have this trade on Foot Locker, which I do like. This is my favorite earnings trade for this week, which I would look at. I think you have to do it. I mean, if you go into if you want to trade earnings, then you have to trade a lot, smaller quantity, and be able to have the wherewithal to do 5 or 10, because the law of averages kicks in more than ever. If I have ever studied this, it's more accurate on that than I've ever seen. So Foot Locker, I would do the 67.50s and the 72.50s. The 67.50s are right here, so I'm going to buy these for 70 cents. I'm buying the strangle. That went off the screen there, I apologize. Buy the 67.50 puts and the 72.50 calls, which are kind of expensive. I'll do the 75 calls. I'm trying to keep this under $1.50, so I can do 4 of these for $500. All right, so we got a couple working orders. Foot Locker, I'm going to bump this to $1.30. Try $1.27. $1.27. See, I almost did $1.30, but I didn't have to. So $1.27, a little over 500. I'm waiting to get, and I'm going to be continually persevering to get that $500 earnings trade into 5,000. And I had a coaching client that I worked with together, who's not on this call. We set up a $5,000 or $6,000 trade for him on NVIDIA, and it was unfortunate because he second guessed the trade, kind of butchered it, bought back the calls. He had like the 115 or the 110 calls for May 19, bought them back, and he paid like $3 or $4 for them. I forgot what it was, but nevertheless, let me show you that real fast, because this is the most important thing that I feel like can ever tell is to show something that's true, something that we can learn from. And this example is an example that you really don't want to repeat. And out of respect to my client, I'm just going to make sure his account isn't on here. So here we have it. So this was his filled orders on the, let me just go ahead and make sure, there we have it. So these were his filled orders on NVIDIA. And basically, these 105 May 19 calls, purchased these for $4.25. So that was $4,250. Those were worth $30,000 right now, even on the sell-off today. I'm not sure why he didn't hold on to them. He closed them out right here for a loss, just kind of showing you new traders sometimes have a tendency to overtrade and get fearful. But let these work. If you are in a strangle play and you're unemotional and you're playing both sides, like on this Foot Locker example, the Ross Stores one this week, not really feeling it because I already butchered that one earlier on with buying these 70 calls. I should have bought both of them and it would have been a great winner. So I continually, and there we have it, I continually prove to myself, and we don't know anything. I don't know anything, you don't know anything, and none of us really knows anything in regards to what's going to happen on an earnings call. I'll try to get this Palo Alto trade into next week. I think we have some more time on that anyways. But with the earnings strangles, you have to really be disciplined, unless you want to gamble, which I've definitely done. And the gambling on Snapchat didn't work out because I took the bullish side, and this one didn't work out. This one was more of a business-minded trade that could still work out because we have time, and this is one where I should probably sell 10 more calls, but I've slacked on that. So this is one where we're relatively close to 50, still could be good, But the real money happens when you have a real strong breakout, whether it's up or down. Foot Locker could be a strong breakout. Palo Alto could be a strong breakout. And this Net app could be a strong breakout. I mean, I could see this trade down to 35 on a bad earnings or up to 45. It's just, there's no telling. You can kind of see this continuation, those couple days when you are in the money on the earnings, halfway through that earnings day. If you are, stock's at 28 and you bought the 30 calls or the 32 calls, say the 32.50s, and then it's trading up to 34 that day, and then the following couple of days it's up to 35. That's a lot of extra money. Those couple, it doesn't seem like a lot, but when you are that close to expiration and you're already having inexpensive options that are in the money, they compound and grow. And that's what we have to find. And that's what's going to happen every earnings season. There's always these examples. And I've never followed it this close, but the more that I follow it and track it and analyze it and really have fun with it in a business sense, the better off it's going to be for all of us. Hello, this is Tyler Chianelli, CEO and founder of Option Trading Coach and Options Trader Club. And in this video, you can see the market is about to open in about 3 minutes. And I want to show you a trade that I made this week on Wednesday during my live trading room with my Option Trader Club members. And I'm going to show you this as we go into the open. You can see that the S&P E-mini futures are up 7.5 points. The Nasdaq's up 23. The Dow's up 40. The VIX is down about 10%, and then we have gold basically flat, and I think oil's in the similar suit. But what I did want to show you is I have this earnings. We're getting towards the end of the Q2 earnings season, and you've probably seen emails I've sent in the last couple weeks for May and even back in April of different earnings opportunities and using this long strangle strategy. And there's definitely some examples down here where it didn't really work too well, like this snap trade. I took a bullish bet, and that was kind of an example where you can't really have success and scale a strategy like this one when you're being directional and you're guessing, or you have instincts and you think something's going to happen. I've learned that the best and the easiest way to scale this entire process is to have an unemotional approach to where you're playing both sides. So this trade on Foot Locker was put on, I'm going to show you the exact trade right here. So I use this tracking spreadsheet, and you can kind of see, I'm going to just keep it towards the bottom for the integrity, but this Foot Locker trade, when the stock was trading at 70.86, I put on the long strangle for this expiration expiring today, May 19th, and I did a 4 lot, so it was only a $508 trade. And my cost per strangle was $1.27. The market's set to open in about 1 minute. And the Foot Locker trade, the stock's trading right now in the pre-market at about 60. So I have those 67.50 puts, and I paid 75 cents for these. These are going to go up about 1,000% today. So I already have a pending sell order to close out just the puts for about $7.50, which is 1,000% on that cost basis. And this is exactly what I want you to be able to do. Having the wherewithal, the confidence, and the ability to make trades like this, and you're not going to get them all right. Sometimes you're going to have an example where you might, like on Ross Stores was another one in the same echelon this week, where earnings really wasn't that strong. This is going to be tough to make a large profit or even make a profit at all when you only get like a $1 or a $2 move. This looks like about a $2.20 move. And the market makers had a $3.40 move priced in. On Foot Locker, which was the better trade, the market makers had a $4 move priced in, and it's down 10. So that's how you make a very significant gain, is when they get it wrong and you get it right, which is where I can help. So we got 9 seconds. This is going to fluctuate pretty rapidly, and I'm going to show you the process of taking off a winner. This is my biggest earnings trade winner so far in 2017. We should see this have some fun here in the next few minutes. So after you have a big move on earnings, it definitely takes a little bit of time to have the prices settle. And you can see right here some of the intricacies of the option chain. So we can see nothing's been moving yet. The 67.50s are still bidding at 85 cents. even though there's $7 of intrinsic value. So give it about a minute, and then these prices will recalibrate. This should fill around $7. And this is the fun part. This is where you get to take off a big profit once the prices start to settle. So we're just going to be patient. I'll show you the chart while we're waiting. This is another trade I had on Salesforce. Look at that gap down. So that gap down, I want to close out any minute now. So every time it's trading up off of this price, I'm giving away profit. So this is the only setback, is when you're waiting for your bid and ask to kind of recalibrate. Still good amount of open interest, and the liquidity is fine here. It just kind of the first 5 minutes of the trading day, when you're not trading like super liquid names like the Facebooks and Apples of the world or Google, Amazon, takes a little bit of time to get that settled in there. But I do like the price where we're at, as far as being $7 or more below the strike price. So I have one question for you. If you are someone who wants to do this and learn, are you prepared to make these types of trades? Again, this was only a $500 trade, and the net liquidation on this should spike up to over $3,000 any minute now. And the best part about this is that we have these happen every single quarter. So there's literally 10, 20, 30, 40 different earnings opportunities every 3 months. And they're spaced out to where you don't have to, overexert your focus to where there's too much to do and you can't really effectively trade or manage these. It's about creating a system and understanding the process to do this so that it works for you and your schedule. Still waiting on the. This is kind of odd. I mean, it definitely should be. We're about 2.5 minutes in, and we're still not seeing anything on the option chain yet. There it is. 67.50 is up 650%. 650%. So I had a 750 price in, which was about $1. So I'm always a little more aggressive with my pricing. But you can see this $500 trade made over $2,000. That's over 400%. And I'm still going to work this order into the next couple minutes here. I like to use an intraday chart and be able to get the best timing. So this is something that I definitely would customize, because I use a couple of different screens and I have a couple of different accounts, so that it's easier for me to use the day trading time frame. On this one, I don't use that as much. But if we go back to that 3-day 1 minute, you can see that we're trading down lower right now on a 1 minute bar, to where if we can just trade down to this price right here, which we did hit in the pre-market, then I'll be able to get that filled. It's really not worth being nitty gritty. Like, I'll take this off for $7, And the other thing is, like, what do you want to do today? Are you busy? Do you have plans? Like, I don't want to be in front of the screen trading all morning because I have meetings and I have different things to take care of. And I already know this trade's a great winner. And I think I had another one down here on Salesforce, which could be good, which is just getting started. So this is what it's all about, is having winning trades like this that are going to help really just make your week, which if you stack up a couple good weeks, it's going to make your month. And this all starts with your foundation and your education. The Trading Mastery Program is the most complete, comprehensive trading educational product that I know of. I mean, I'm not biased because I've been through other programs. I just know that I put my heart and soul into this program, and it teaches you all these strategies and more. And it's something that you can really use for the rest of your life, and you can pass down to your kids or your friends, your family. And that's what it's all about. And this right now is about to get filled. I could modify down to 680, even though we're trading at 7. And I'm going to give it a couple more seconds. So 650, if we can trade down to 60.50, I should be able to close this out for about $7. And it's right there. So you can kind of see the 700% gain on the puts. Of course, the calls over here are down 98%, 95%. There we have it. Just sold 7. Just sold all 4 at $7. That's a $2,800 credit. The trade made over $2,200 down here. It's probably in my trade updates. So yeah, it took off the call side because you saw the whole process happen. It took off my call side down here, and now I just have these worthless options. So the beautiful thing is, right here, 7 times 4, that's a $2,800 credit. My cost basis was $508. So it's pretty safe to say that it's about a $2,300 profit. Factor out maybe 15, 20 bucks in commissions. And this trade made right about $2,250 off of a $500 investment. If you want to learn more about how to do this, I can help you do that. Not only can I teach you with the programs, but I can help you implement and learn with live takeaway strategies through my trading room, through my different classes, and through the education that I do on a weekly basis. So thanks so much for stopping by. I'll see you on the next video. Have a wonderful rest of your day, and we'll be in touch.